Welcome back to our video series about binary options. In this video, we're going to talk about time, or the clock, and how it impacts your trading strategy. These days, many of the world's financial markets, especially the most liquid ones, trade 24 hours a day. But you need to know the best times to trade your asset to make the most consistent profits. So, what times are best? Well, the answer depends, of course, on what asset you're trading. In general, you want to select a time when the largest number of market participants will be awake, at work, and fully engaged in trading. That will mean that you'll have the most liquidity and the most consistent, predictable markets. During off hours, a single trade can move the market and negatively impact your binary options trade. So, as an example, I trade the currency pair EUR and USD. This currency pair is traded throughout the world, but primarily out of New York and London. The best time to trade this pair is during the hours 8 a.m. to 11 a.m. New York time, because this is the time when both New York and London Forex markets are open. So there's overlap within those trading hours. Within those hours, U.S. economic news is often released, and that news can move the market. For that reason, I always check the economic calendar to be aware of any upcoming news. I can also make sure to watch the news on TV or on the internet for any unexpected announcements and events. Whether you trade this currency pair or another currency pair or even another asset class entirely, the concept will be the same. Make sure you know the primary market for your asset and the trading hours of that market. If there's more than one market, you want to make sure that you focus on that overlap time between the markets, if there is any. Then, of course, be aware of any news, expected or unexpected, that may move your asset. Another thing to consider when it comes to time of day is the opening and closing times for the market. Open and close are particularly important when it comes to the equity markets. At the open, traders get their first chance with all the information from the night or even from the weekend. If pre-market trends are looking strong, for example, based on positive economic news, I will often bet on the momentum continuing by buying binary calls. This opening momentum typically lasts for at least the first 5 to 10 minutes, so I will make money most often on these call positions. If there's no significant news and the market's moving slightly higher, I will often bet that the trend will reverse by buying binary puts. Binary options are great because they're fast, so you can enter and exit a trade within that first few minutes after the open. I often trade the S&P, and on one particular day, as you can see here, I knew that an economic news announcement was due at 10 a.m. So 10 a.m. is represented by this vertical blue line here. So I knew that whatever trade I did, it had to be done before that point. There was no economic news in the market. However, right after the open, the market ticked higher, and it ticked to a point above where it had traded during the pre-market. This horizontal line represents the maximum price level achieved during the pre-market. When the market traded above that point, I bought a binary put, betting that the market would revert prior to the news announcement. And because binary options are so quick, I was able to make my bet and have my option expire, therefore have my profit, prior to that announcement. Heading into the close is another time that you can use to your advantage. At the close, traders are rushing to get their last-minute trades in before the night or weekend. Typically, anything within 30 minutes to an hour ahead of the close can be considered a close-based trade. For close-based trades, you have more information from the day's price action that you wouldn't have at the open. But the key is to determine the relevant trend and whether it will continue. So here's another example, again looking at the S&P. This is a Friday ahead of a long weekend. So traders are wanting to make sure that their books are positioned properly before they head off to their weekend vacations. Looking at the day, the market had failed to break above the prior day's close at the morning. This top vertical line represents the prior day's close. Later in the day, it was able to break above, but quickly fell back below. And that began this bearish or downward trend. When it failed for the third time to break above that prior day's close, that set the trend for the afternoon. And based on that trend, I was able to place a few strategic binary put options. The first I placed when it clearly failed at unchanged. I bought a binary put. I entered the second trade when the market broke below this support level, indicated by where the market found support in the morning. When it broke below that level, I entered the second put trade. The third put trade I entered when it attempted but failed to reach above that key level. Note that if the trend had broken and I had lost money on any one of my trades, I would have stopped trading that trend. You have to be able to recognize when trends begin and when they end. But here's an example of how you can use a trend to trade going into the close. And you can see that that trend continued throughout the afternoon and strengthened heading into the close prior to that long weekend. Binary options are unique because they have a very short time horizon. This means you can take advantage of information and price action at many different points during the day. Understanding time and how the clock impacts your assets can help you tremendously in your binary options trading strategy.